Hello everyone, this is Juan Sarmiento and today is Friday, June the 23rd. Well, as usual, I want to tell you a little bit about my impressions of the market. You can see that it has exceeded the previous high, and here back in August last year, and now you can see it's pulling back a little bit, but I think it's probably finding support here before going higher. You can see that my channel looks pretty solid right now, so I believe the market will continue higher. At worst, it could pull back to the Ichimoku cloud, but I really am not expecting that. It's just a small regulation pullback. Let's take a look at the weekly chart. And here is my next target here, which will coincide with the upper level of the channel, and then perhaps here. And then we would see a breakout to new highs or a pullback then. You know, all these support levels become resistance. It's like a ceiling that needs to be broken through. The same way that it did here. It broke through, it is pulling back from that new high. Okay, so looks good. Next, we're going to go to the monitor tab and see that we have made $1,500 since the opening. And yeah, we have seen pretty bad markets, but we are slowly recovering. So this should serve as a support to the idea that you just simply buy the market. Eventually, at some point in the future, you will make your money and get out, or sell covered calls against your nest egg created with the SPY. We have $132, and I would like to buy one share at $434. So I need to add cash. So let's adjust our cash here and just add 500. This is what I've been doing. It's a paper trading account. It's a demonstration, and so let's add that $500, and now we have $632 to spend. Okay, let's go to the trade tab, and here let's say analyze tab rather, and you can see here that I have 107 shares, one pretty much more or less every week since we started this account 107 weeks ago. So you can say that, you know, there's nothing to fear here, that the markets at worst, it gives you a channel for you to invest in a more or less safe way. You don't want to lose your shirt, but you will obviously, when the market's correct, take a bit of a hit. But it doesn't matter because you have a long-term perspective. Okay, so let's add my regular, usual one share. So click on the ask. That will give you 100 shares, which we don't want to buy. We just want to buy one. So delete the zeros here. And we're going to pay $433. Our average price is $419, as you can see here. Okay, and of course you could sell a covered call against it, and usually what we would do is, for covered calls, is to look at 28 or 35 days to expiration, look for the option with the most extrinsic value, click on the bid that sells one call, which is equivalent to 100 shares, and this is what the risk graph will look like. Okay, not gonna do that, but this is a way of collecting $726 every month, if so you desire. So for now, we're just accumulating money, and at some point in the future, I don't know, 10 years, 20 years, 30 years from now, you could begin to sell those cover calls and then get money back, keeping your shares left alone. Okay, that's all for today. Thank you very much for joining me. See you next time. Bye-bye.